Thank you. Well, it's a solid 400-point up move on the Nifty as we speak. We are above that 24,300 mark. The Sensex cruising well above that 80,350 mark. So just about around that 80,400 mark. And mid caps are doing well. The Bank Nifty, 2% uptick coming in there. 52,000 has been cleared. And how 1,000-point up move on the Nifty Bank Index as well. On that note, let me bring on board a big market voice and how to really navigate this leg of the rally. Joining me, Sunil Subramaniam, market expert. Sunil, great to have you on the show. If you follow cricket and if you're a cricket fan, of course, the sun is shining. The Border Gavaskar Trophy match that's on in Perth. It's been a comeback match for Virat Kohli. Special innings and everything is going well for us here as well. Friday we had the bad news in terms of what happened with Adani stocks on Thursday, but we staged a very strong comeback on Friday, and of course the Maharashtra verdict has given that much needed push to bulls. 5% up move on the Nifty in the last two sessions. Do you think this is a comeback match for the bulls as well? Or do you think it's just a feel-good factor?
It's a combination of both. So what I would mean by that is, yes, there's a feel-good factor around the fact that with Maharashtra and Haryana, both BJP reversing the Lok Sabha trend, the feeling of policy continuity, that the developmental populism, which has now been adopted as the mantra, is working well at the hustings, right? So there is that feel-good factor. And you talked about the bulls, whether it's a comeback, right? It's a comeback for domestic bulls and not yet for FII bulls. And why I'll tell you this? Because while FIIs have been staying away for various international factors like Trump election back, international volatility, China stimulus and thoughts of those have kept FIIs away from a market ever from 1st of October, right? Off and on they've been buying. But the domestic mutual funds, for example, which are sitting on huge piles of cash and all of that, were also very cautious through this phase. They didn't buy everything the FII sold, and that's why you had the volatility. Now, why was that? One is, of course, is that the earnings season didn't turn out as promised, right? So from that point of view, the second is that this was a changeover period for the market where it shifts its focus from this current year to the FY26 numbers. And this earnings season was also important from assessing the future for the next 1 year for each of those companies and hence the sectors. So there was a cautious wait and watch approach by domestic fund managers. And I think cash balances were rising across the board in this period, right? Now, the set of corrections, because they didn't come in and buy when the FII sold, naturally led to a set of corrections. Was that correction enough to have taken care of the downward revision in earnings guidance? Not yet. But what happened with the Adani trigger, that suddenly there was an across-the-board sell-off. Yes, Adani stocks sold off that day, but across the board there was a sell-off. And that then led to the Friday rally was essentially the bulls saying that domestic sideline, those who were there, the big DIIs, saying that, look, now there's a correction occurred, so maybe we are closer to a mean valuation, and let me now step in and buy. So I think that started the process. The Maharashtra election strengthened that. So the deployment of cash by the DIIs has gone up significantly. And if you see the nature of the rally, right, is the cyclicals, the risky assets are the ones which are rising because those are the ones which had fallen the most, but they were still cautious. So now the market, I know, is going up very sharply today. And if you see the defensive sectors like IT and all are not doing so well, pharma, because it's a risk-on rally, right? Now, what happens is that I would still say FIIs, if you look at the short term versus long term, I know there are medium term FIIs, but we'll leave them out for the time being. The long term FIIs would start making a comeback because for them the policy continuity and that for the next 5 years this government will not be under threat. They will actually go through reforms, and I would expect that to slowly start building up. But the short term FIIs will still continue to stay away from overall emerging markets, and India will suffer that a bit. So I expect the volatility from FIIs to sustain for a little more time. But come January, I feel that the FIIs will come back to India as the January results will truly reflect the festival season, which was not fully reflected. Diwali happened only end October. So I think those numbers, when they come out in the January results, you will see that suddenly earnings will be revised upwards. And then you have a budget. And now you can be confident that with the Maharashtra election in the back, the government will actually go through with a very strong, not to worry, focus on infra, and so I expect a pre-budget rally. So I said somewhere mid-Jan, when the FIS start coming back from their annual vacation, redeploy, India will look more attractive than it has been over the last quarter. Plus, you will have the budget-riddled euphoria. So I think when that FIS come back, then you can really talk about whether bulls are back, because with the double engine buying of DIS and FIIs, market could very well touch new highs and recover all the losses of the last few months in by the budget time. So that's my short-term read of the market situation.
All right, and that's a very good explanation of how things are expected to pan out, and of course, very optimistic view coming in. And it's music to the ears, right? After the kind of correction that we've seen and all the bad news that we've had to really take in our stride. But where exactly do you expect the buying to come in now? Do you think the Modi stocks will be back in play because there's a strong center-state alignment, decisive victory, of course, that we've already spoken about, and government spending is also expected to come back now. Now that elections are over. And everybody was expecting, of course, government investments to come back in the second half. Some of these names in the PSU pack, defense, shipbuilding, all of these have seen a good 40 to 50% correction from their highs, right? So is it the right time to look at, stocks in the PSU basket? Because the PSU universe is quite big, so to say. So where should one really nibble in if this is one pocket that one should get into?
So I would say that the euphoria around the PSU stocks, the bubble got burst quite a lot, and this huge correction, right? And with the Maharashtra election result, yes, I think those what you may call as Modi stocks, right? To the extent that the government is expected to support the PSUs and take them forward with allocations and all that, is something that the market will now start correcting those the falls that's happened, right? So buying would start in that. But as you said, right, PSU is a very generic name. You got to break it down segment wise. And if you look at it from a PSU index perspective, the big energy, the metals pack, these are the big parts of the PSU index. But if you take a broader approach to it, right, to me, PSU banks are probably the ones which are going to take the bulk of the allocation. And there's a larger reason for this. One is, of course, is the government support to the PSU banks will continue. They are the primary arms of the government spending their money, in terms of, as you said, government spending has to come back in the next 2 quarters. But more importantly, right, with the manufacturing cycle now expected to get a boost with the government's reforms and everything, it's the PSU banks that are going to the forefront of lending to the small and mid-cap companies, the capital goods suppliers, the cement suppliers, the steel suppliers. I think the bank lending, corporate lending is going to drive, the PSU banks' earnings up, and hence I would say that PSU banks within the PSU bank would be my primary pick, right? And as far as the metals and the energy pack is concerned, right? So there, I think the international factors also play a role, because if you see in metals, it's the LSE Metal Index, right? The London Metal Exchange prices decide a lot of the future, so it's not so much India related, right? So from that point of view, I would say that internationally, right, Trump's actions play a part there. And China's effort, because China is the biggest buyer of metals in the market, plays a part. So it's not a very simple situation of looking at the domestic perspective, right? The third thing is from a manufacturing and defense you mentioned, right? So I think that in this budgetary allocation, right, it depends on how much defense is going to get an allocation to get a boost. But one of the things that I see from a medium term is that defense is a good play. And the reason for that is completely different from these local dynamics. It's to the fact that when you look at the Trump factor, right, and if you look at the whole tariff situation and what he's going to do, right, obviously he's going to slap China tariffs a lot. India also will feature that, but with India, there's a two-way process. India could turn out to be a quite significant buyer of American defense equipment, and which will come in the form of a joint venture being set up in India through the PLI scheme. And so there'll be some localization, there'll be this, and it will be the PSU companies here, which will be the partners of that. So over a medium-term perspective, I expect that India will be a big buyer of American defense, and that will be localized. And so to that extent, defense, I think, should be a good buy because it's corrected a lot. But you've got to be waiting for about, let's say, 2 to 3 years for it to really show through, and take a staggered approach to buying in that. But I think that don't expect short-term results immediately. But over the medium term, I would back the defense within the PSU space as a pretty positive thing to look forward to.
Okay, point taken. But since we are talking about Trump, which according to you is a Trump trade now? Because IT has seen a sudden burst of enthusiasm after the U.S. election verdict, and let's also talk about Bitcoin on the verge of hitting that $100,000 mark. I mean, that's insane, right? But as a Trump trade, what would you really look at?
No, I still think the Trump trade are two things. So one is IT. IT will continue, and the reason for that is uh, to split the Trump trade into two things, right? One is U.S. economy, manufacturing, banking sector, all are going to benefit from an easing of taxation and a support by Trump, right? And so IT's primary buyers, the U.S. manufacturing and BFSI sector, if they are going to see a very positive earning cycle, they are likely to spend more on IT. So I think IT will continue to be a Trump trade. The second reason for that is also that a strong US economy and a strong dollar. You're looking at the inflation and the economy numbers, looks like the Fed rate cuts are now little more on the back foot. So the more the rate cuts get delayed, the more the dollar stays strong, the more the rupee weakens and is positive from an IT trade. So IT still remains my number one Trump trade pick, right? The second is, funnily enough, just back to the defense factor, it's the manufacturing. Because I see the US-India relationship really growing on the strength of manufacturing, because for all that Trump talks about tariffs on China, bear in mind that these have an effect on inflation at the ground level. So it's one thing to do election rhetoric that I will do action against China, but it's another thing to pass on that inflation to the American consumer. So what is the via media that Trump will look at? He will slap sanctions on, tariffs on China, but he will shift a portion of the production to India on a you scratch my back, I scratch. That's why I said Trump will force pressure on India to buy US manufacturing, but at the same time, India will not suffer that much. There'll be a lot more outsourcing business coming to India from India. So I think that India will be the beneficiary of this. So the manufacturing cycle in India should get a boost both from exports into US and an import substitution from the defense part. So I would say India manufacturing should be a big beneficiary of the Trump trade.
Just one more question, in terms of IT, don't you think there will be an adverse impact of immigration or tighter immigration policies on IT as well? That would be a
No, see,
negative, right?
if you look at the IT factor, I think there's overhype on this H1B visa part. Okay, why I'm saying this is, if a Indian engineer is getting an H1B visa and working in the US, right? It's very hard to keep that much differential in salary with a US employee in the US. Okay, so it's a good option because it's right. You're at the center, you're working there and doing it, right? So, but all IT is not only about doing onshore work, which is one the part that H1B visas affect. There is something called nearshoring, where you base your workers in Canada or Mexico and then service the US. And there is offshoring, which you do from India. No, H1B part is going to affect only the onshoring, right? And so to that extent, I think that this care about that H1B, right? And you look at the number of visas related to the total number of IT employees, it's a fraction of it. So it's more of a media, it's a hype, it's a PR thing about this. But actual ground reality is that if a US corporation wants to save money, right, he's going to give that business to an Indian or other IT company. Where they manufacture it from is going to result in the profitability difference, right? The more you go closer to the American shores, the costlier the labor force is going to be. And I'll tell you the reason for this is because if you look at the per capita income of the US, it's 75 to $80,000. China is at 12,000, India is at 2,700. Can you imagine the huge difference in cost? And so practical reasons will make Trump realize that tariffs are good election rhetoric. But in the practical factor, is he prepared to get the American consumer to face that inflation or the American corporation to face a lower profitability? So there will be a give and take. Obviously, he has to show that he's living up to his election rhetoric. He will pass token this thing. But when you are then practical, and he is a pro business, so American business needs outsourcing, needs support from countries like India to improve their profitability. So I think that that's a bit overdone, and that's why, despite all of this, if you say the IT pack has rallied post the Trump victory. So it's the real reason is that I think the immigration part also, he is against illegal immigration. Now, yes, illegal immigration, there is immigration, and there's H1B. Now, H1B is not immigration. See, people tend to put all of these into one basket. H1B is a right to work. and then you have a long process to get a green card, and then after the green card is when they become a US thing and then get citizenship. So they are completely different. What he is worried about is the low-end workers sneaking in from Mexico. So he's going to build a wall on Mexico. He's going to send back all those people who came in earlier, and they have nothing to do with India. We are not in that proportion of situation. So I think there's this word immigration is suddenly taken on a shape of a dragon, and everything that's related to coming from outside US into US has been treated with the same paintbrush, but they are not the same. Illegal immigration is what hurts the common man, because their work, a normal sweeper, a normal plumber, that work is being taken by a Mexican illegal crew creeping in, is what has hurt. It has nothing to do with the high-end IT jobs, which are in the corporate sector. And corporate sector wants that low-cost sourcing from countries like India for their profitability. So I think pragmatic reality will mean that this will not be that much of an impact as it is made. I'm not saying zero impact. Please bear in mind, right? There are the token things. You say, I'm putting a cap on H1B. Those announcements come. But practical reality, I do not think that the IT's business prospects, right, are going to get anywhere near as deeply impacted as is anticipated by this whole hype around the immigration.
And, of course, the market seems to understand that point well, given the kind of rally that we have seen in IT ever since Trump's victory. One, last question really, which I've been meaning to ask you for a long time, it's on the gas stocks. Of course, the government has cut allocation once again. In a matter of 2 months, allocations have come down by 40% or so. And we've seen the likes of MGL, IGL, they've all reacted with price hikes, as their gas sourcing price or, raw material costs go up. And, of course, that is expected to dent their profitability and earnings as well. But the quantum of price hikes have been underwhelming, so to say 2% vis-a-vis what analysts are saying that, what you need is an 8 to 10% hike. So given the fact that, these companies will take a big hit on earnings, is the investment case for these stocks looking very weak? Should one, not look at or write off gas stocks for now as an investment bet?
Yeah, I would agree with that. It is a case that there's I don't know, regulatory overhang on that sector, because if they are not able to raise prices to the extent, this whole energy sector in India itself has got a lot of regulatory overhang, and I would say that one has always got to be cautious in terms of the allocation. And plus, the international scenario around that is also not very conducive. See, the other thing Trump is going to do is he's going to pump gas like there's no tomorrow. He's going to try to revive those shale gas. So international oil prices are going to feel the impact of that, and there'll be a spillover effect on the gas side. So yes, I would say stay cautious at this point on the gas bank. I agree with that.
All right, caution warranted on the gas back with that. Sunil, thanks a lot. And a very insightful conversation, and I always look forward to our conversations. Hopefully, we'll have one soon, once again before the year end as well, and where I can get your views on where you expect the markets to really close, when it comes to the December end. But thanks a lot for taking out time and joining in, Sunil. Look forward to interacting again sometime soon.
Sure. Thank you.